Okay, you see how we moved up in at the 101 level. Look what they left here. See that? See how clean that is? Price does not like to leave those types of formations in its wake. So in other words, even though we had a market drop, even though we took out a swing low, even though we had a fair value gap, even though it came up here and filled it in, look at the bodies respecting that. It's beautiful. It's beautiful price action. Yes, there's a little bit of movement above it with the wicks here, okay? But the bodies, look how it's telling the story there. That is algorithmic price action, okay? That is delivered by an algorithm. That is not buying and selling pressure, okay? That's not supply and demand. It's not harmonic. It's none of that stuff. It is the algorithm delivering price on its terms. And we as speculators have the fortunate opportunity to be participants in these opportunities when they are presented. But they're not going to be profitable because of things we learned in books. Indicators didn't drive markets higher or lower. Any retail logic did not drive markets higher or lower. These markets are going to book, print, and deliver on the basis of its algorithm. Now, either you understand that and get in line with that or get run over. If you're winning in any school of thought, and I don't care what it is, I've done all of that stuff, okay? The only time that I can look back and see when my trades were profitable is when I was in line with what the algorithm would do anyway. Now, some of you watching, and you may be watching this as a new viewer. For some of you, this may be the first viewing opportunity you had with me. And it's going to sound like this guy's talking conspiracy. Well, it's not conspiracy. It's obviously, we're running electronic markets now, and AI is driving it. And there's really nothing you can do to change it. So the only thing I can suggest to you is just investigate the things I suggest are happening in the marketplace. And I promise you, if you spend, a good month, you'll either see it. If you don't, move along. There's a lot of other people that are very friendly on YouTube. I'm not saying that they're good. I'm not trying to represent anybody saying as a good teacher. But there's other people out there that are willing to give you their time, and you go chase them. But with the dollar index showing even the signatures that I have been showing you in the YouTube community, doesn't this low being broken here in that fair value gap hits it right there? We have another higher fair value gap. So what does that mean? It could trade up into that, but we're looking for the entry in here. And then look at that. Now, is this a 1 minute chart? No. How about a 2 minute chart? 5? No, of course not. 15 minute? Nope. It's an hourly chart. And that same fractal nature of that pattern I'm teaching you in the YouTube community, it exists here. Now, if we look at the high and the low, that whole price swing here, from that low up to this high here, that parent price swing, if you put a fib on that and find out 50% of that, it's going to put you about in this area. So I'm eyeballing it, but ultimately right below that low. Isn't it interesting? That's exactly what I was teaching you in the YouTube model. But I'm teaching you to use it on any market. Don't be on this team mentality, because I already see it brewing in the comment section. A lot of futures traders are like, yeah, ICT, I love the NASDAQ trades, and the E-mini S&P, I love it. We're futures traders. We love what you're doing. Like, I just discovered futures trading. I did that stuff back in the 90s. 1992, I cut my teeth on all that stuff. This is applicable to Forex. It's applicable to bonds. It's applicable to futures. Okay? I have students that will swear by it working in crypto. For the folks that are asking about crypto, I am not a crypto trader. If I traded crypto, I would blow my accounts out. Okay? There you go. I'm not good at trading crypto. If I was, believe me, you'd hear about it. But I'm not. Okay? So I bloomed where I was planted. Okay? So I'm good in Forex. I'm good at futures. That's it. Okay, I don't need to be anything else. I don't need to be a jack of all trades and meet everyone's expectations. If that doesn't, tickle your fancy, I apologize. But again, back to what I said earlier, you're welcome to go see someone else if it's not what you're looking for. But it goes to about 50% of that parent price leg here, from here to here. That's algorithmic. So we have a break in structure here, fair value gap here. The volume of the move is inside the bodies of the candle. See that? We always allow for some inherent price action with the wicks and the tails of the candles, but we're looking for the underlying narrative. It's likely to go back in here and fill this one single candle that created that imbalance. This candle's low, this candle's high, that small little imbalance right in here, it goes up and fills in that, spends some time there, then breaks aggressively, attacking all the stops below here, 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 fills in the gap, and then goes right below that low. Why? Because equilibrium exists between this low and this high. Why did it drop like this? Because it hit our second target of 101. And plus, it's 100 points or pips above the full 100 level. Where's it at? Good grief. Here it is. Okay, so we really stretched above it, and then we had this. Now, to me, this looks a little bit like them trying to produce this sentiment idea that the dollar has topped. I'm not convinced of that yet, okay? It could, and I could be absolutely wrong, and these highs are maybe the ones that top the dollar. That always exists. That's where I can be wrong. I don't mind being wrong by not trying to pick tops and bottoms. I don't mind that, okay? It doesn't make me feel inferior. It doesn't make me feel like I don't know what I'm doing. It keeps me on the right side of institutional order flow. Institutional order flow is rooted on higher time frame bias, okay, and that being for the dollar, it's bullish. Well, it's bullish in my opinion, let's say it that way. So while I don't subscribe to the idea that we have topped here, I like the idea that we came back down into this run, and it looks like for everyone else that may be looking for resistance ideas and a break in the market structure and a break and retest idea. I don't think it's that simple. I know some of you will argue and snicker and say, oh, it is that simple. That's fine. That's for your model. But I'm talking about calling tops and bottoms in the marketplace. That's what I'm specifically honing in on. I think that we're going to revisit that 101 level, and we have unfinished business above it. That means it's likely to go a little bit higher than that. That's what I'm subscribing to right now. I'm not convinced at all that we've changed gears. Now, why am I beating this up? Because some of you didn't listen to me when I said that. Some of you didn't listen to me when I said it the second time because you have selective hearing. You're waiting for the word order block or fair value gap or break in market structure because you came into this video with preconceived notions or expectations that I'm going to somehow qualify your analysis that you think is going to happen in Forex. So therefore, when I say these buzzwords, your ears are going to perk up and you're going to be real attentive then. And then what will happen is you're going to do something in the marketplace based on that and not even listen to anything else in this video because I'm talking too much. That's going to be the excuse. But you're not listening, okay? You have to listen and understand what I'm teaching you. That's the lecture here. Do not try to pick tops and bottoms. You don't need that. There's a lot of opportunity between intermediate term highs and lows. I don't mind missing the long-term high and a long-term low. I don't need that. I can be wrong in trades trying to be bullish on dollar. I don't trade the dollar, but if I'm bullish on dollar, that means essentially I'm what? Bearish euro, bearish British pound versus US dollar. All foreign currencies I'm bearish on and bullish on dollar. That's essentially what I'm saying here. So I don't want any of you taking what I'm saying here in one sentence or one little notation that I make reference to in a specific chart and make a sentiment idea, okay, or a justification for your trade. So just be mindful of that, okay? All right, so 15-minute time frame, we finally made it. Sell side liquidity resting below these lows in here, swing low, and we had sell side resting below here as well. So as I mentioned, too clean up here. They're really building the idea that this is resistance. I don't think that's the case. And we might want to go a little bit deeper. If it retrades back, let's go back up to this here. We could trade back to the 100 level, maybe sneak below it just a little bit to make everybody think this is really done. If I was making the market for $1, I would take it down below 100, dip it into 99.95 or 92 in that area here, and then start to work it higher. That's how I would do it. because it would convince everybody out there that the dollar is probably topped, and then I would take it the other direction. You know what I'm talking about. It happens most of the time in your trades. You get in and you take something, all of a sudden, it's not as bullish as I thought it was, and it went lower. I've been there, folks. I'm not making fun of you. All right, so here is that hourly fair value gap, but now look at it with the lens of the 15-minute time frame. So we have this area here, but then we have this imbalance right there. So it comes up a little bit deeper, closes that in. What do these two up close candles represent? A bearish order block. So we can use the low of the lowest up close candle and its opening price. You draw that out in time, hammered it. Why is this an order block? Well, it's because it's where price was delivered on the upside, even though it's indecisive candles here. That up close right before this displacement to the downside, it's not, listen to me folks, it's not what these folks are taking from my videos and writing books on Amazon. Completely wrong. And there's a lot of things I'm going to keep from even my private mentorship group about order block theory until my books are released. Okay, and I've purposely held that back. Why is he holding back everything? You know, it's because I have 4 books coming. One's a fiction, and 3 are technical. Okay, so I'm going to put things out there because there's a lot of people out there have falsely stated that they created this or I copied it for something, and you don't know anything about order blocks. Okay, trust me, you don't know anything about it. But you know enough to find something that repeats over and over and over again. In the second book in my trilogy I'm writing, when is it coming out? You'll know more about that as I come. It's a whole pandemic thing messed up the delivery schedule I had for them, but the second volume in that trilogy, I'm going to divulge a lot about order blocks. So that way the world, the community and trading will know it's mine and you'll know more about it there. So anything that happens after the fact, I'm going to correct a lot of people that think they know what you're talking about order blocks, because they're actually harming people that pay them or listen to them, and it's not true. So really what they're saying is the stuff that goes along with supply and demand, and I'm not supply and demand. But why are these candles here on order block? It's because we had the change in the state of delivery where it's already dropping, then it goes higher. So the algorithm is putting kind of like a bookmark. Okay, this is where it will want to refer back to in the future. Okay, think of it like that. So, like say you're reading a book, okay, and you're in this chapter, and all of a sudden real life kicks in, you got to go back to work, or you can't read it anymore because your spouse says, you know, you need to do some things around the house. Hint, hint, nudge, nudge. So you have to stop reading. You put your little bookmark in the page where you're at, okay, and then you come back to it later on. Well, when you stop reading, that's essentially where this candle closes. And then all of this happens while you're away from the book. And then when you come back to the book, here, you pick up with the storyline. And what was the storyline? It was dropping. It just had a little pause in here, and now we go right back to the storyline. So maybe that analogy doesn't fit you, but it makes sense a lot of ways to me. Okay, it's like a reference point that the algorithm will go back to, because the algorithm doesn't know where your specific stop is at all times. Your broker does, but the algorithm doesn't necessarily know where your stop is or my stop is at any given time. But it's based on the logic that is really promoted and regurgitated all the time in books and seminars and course teachers and things. Put your stop rate above the high. Put your stop rate above the highs. You know, it's always the same thing all the time, and it doesn't take, a rocket scientist to sit down on a chart and say, yeah, well, if it's been dropping, find a short-term high most recently, and that's where right above that there's going to be buy stops for anyone that's short. They trailed their stop loss down. So what does that mean? It's like anyone that went short up here and was fortunate to be right, and it does this move here, starts to break down, their stop would be moved from here to right above this short-term high. That trailing stop loss mentality. Okay, I'm not a real big fan of rushing my stop, and that's why I teach the way I teach, because I'm looking for things that make sense, and I'm not trying to strangle the marketplace. But this order block here is a change in the state of delivery. It's been going lower. It's likely to go lower. This displacement qualifies that order block because it creates a fair value gap. And the narrative is likely to go lower. Now, this lower movement is short-term in nature. It's counter long-term bias. Okay? You can and will absolutely lose money trading this style of trading because you're going against the higher time frame order flow. This type of trading, if you go in and you're trying to be very nimble, trying to go in and think you can swing up and down, buy, sell, and you just recently started, you're going to absolutely blow your account. Okay, that is exactly what's going to happen, so don't do this. So why am I teaching this? So that way you don't do it. Understand that this is all part of a natural retracement, and you can trust and study and backtest all the things that I've been teaching you, and they exist even in these moves here. But you may not, and don't be offended by this, you may not have the skill set to see this type of retracement lower and short it. That's okay. You don't need to have that skill set. I have students that are really good with trading contrarian setups like this that don't trust bias because they think the moment they get in, it's going to turn on them. So they like to take contrarian trades where they trust it more because it just makes sense for it to be broken, if that makes any sense. In other words, they know that this possibly may keep going higher because they hear me saying it. But that doesn't change their convictions about being a contrarian. And in some ways, they're going against what I'm saying is a higher time frame order flow bias. But they know how to pick these opportunities where there is confirmation that it's not likely to continue at that very moment. So therefore, they'll go in and go against that bias and take trades. Now, is that wrong? No, because it matches their personality and they know where those opportunities exist. Do I think that all new students should go in with that expectation and that mode of study? Absolutely not. No way, absolutely no way. Because if that's what you really are internally as a trader, it'll materialize and manifest itself over time. But the only way you're going to know that is by learning the way I'm teaching it, because I'm teaching you how to trust the higher time frame bias. Okay? I'm not teaching the trend is your friend, because the things that they're using to promote those ideas, I don't subscribe to. So since I don't subscribe to those views, I don't look at it that way. So I'm looking at how the market moves from discount to premium, premium to discount, and also within market structure. So some of you at times will point and say it looks like this or it looks like that over here. It's only momentary familiarity. It looks familiar, but it's not. There's a whole lot of other things going on that just sometimes look very similar to certain things. But there's a specific criteria that takes place that I'm looking for, that I teach my students, and you learned a very simple approach to that that's existing right here in this chart in the YouTube model.